Thank you very much for that introduction. As I said, I'm Ben Thompson. I'm from Societe Generale, and I've got 10 minutes to give you a very quick whistle-stop tour through the world of exchange-traded products. So I'm going to start quickly just giving you a bit more of an introduction into Societe Generale. We are just about to celebrate our 150th anniversary. We are, as we said, one of the largest banks in Europe with a diversified business model across retail, international retail, and corporate investment banking. I'm here on the investment banking side of things, and more specifically on exchange-traded products. SG has been quite an innovator in the exchange-traded product market for over 20 years, opening markets in Italy, Germany, France, and more recently in Scandinavia. In the UK, we pioneered the exchange-traded product market, introducing covered warrants back in 2002. And since then, the market has grown from strength to strength. We've got some strong accolades in the market, winning Best Covered Warrants provider for the last 3 years with both the Investors Chronicle and with Shares Magazine. So we're very proud of those achievements. But that's enough about us. We're here to talk about you and what you can achieve using exchange-traded products. Essentially, what we think of here is a term that we feel the democratization of investing. So it's the growing trend of people moving away from using IFAs and paying for people to give them advice as to what to do with their money and making their own decisions, building their own portfolios and taking control of what you're doing yourselves. And against that backdrop, exchange-traded products are a very, very powerful tool. They're suitable for practically any kind of investor, whether you're somebody that's investing for minutes or hours or days, or perhaps you're actually looking to build a long-term portfolio. There are different types of products which can suit and help you deliver what you're trying to do. They're very flexible around market view as well. You're not restricted to just rising markets. If you think there's going to be a crash in the FTSE over the next 3 months, there is a way to play that, and you can try and profit from that directional view. Or even actually, if you think things are going to stay exactly where they are, there are products that allow you to generate a profit from absolutely no movement at all in the underlying share or index that the product's linked to. And the last thing is actually what you're trying to achieve. So exchange-traded products give you the ability to target a very specific view, whether you're looking for income, whether you want to leverage a specific investment opportunity, or whether you're just simply looking to tuck away growth into your portfolio over a 5 to 10 year period. So what are the different types and how can you do these? Well, the word exchange-traded products does encompass a huge variety of different investment styles and different products. If we start on the left with the category that we've called trackers, the most common that you will know of in this space is the exchange-traded fund. So here you are literally looking just to buy access to a market. You might be more used to currently buying stocks. So instead of buying 3, 4, 5 stocks of the UK market, so BP or Shell, the idea is that you would actually buy the market. So instead, you buy an exchange-traded fund that provides exposure to the FTSE 100 index. So instead of buying 3 or 4 stocks and paying your broker commission for each one of those stocks and having quite a polarized risk around 5 stocks, you're actually buying one fund that you pay for once, and it gives you exposure to 100 of the largest stocks in the FTSE 100 index. So that's a different style of investing. And these are, as we say, tracker products. So they literally are designed to rise and fall with the index that they're tracking. So there's no leverage, there's no manager behind it trying to outperform the market. You are literally just saying, I think the UK or France or Germany or whichever market it is set to rise, and I want to get low-cost exposure to that. They're UCITS-regulated funds. They have to comply with all the regulation of the UCITS framework. And they are designed most specifically to build low-cost, diversified portfolios that you're holding for a long period of time. The average investment cost is 30 or 40 basis points. So when you compare that to an actively managed fund, which may charge you 1.5%, you're saving an awful lot on the actual investment that you're buying. In the middle there is what we call our structured products. And structured products are very, very popular in the IFA space. £6 to £8 billion a year is invested in these products. They are a different style of investing. They target a very specific investment view. They have a very specific investment outcome, and they typically have an investment term of between 1 and 6 years in term. And you'll see there that there's some quite interesting names. So an auto call, for example, is a product which will have a 6-year investment term, but it has the ability to pay out based on the performance of an index or a basket of stocks if those stocks or index are trading at exactly the same level next year as they are this year. If they are, it will pay out and it will generate a return. So this is a very popular style of investing, and it's just an alternative way to building the portfolio. At the far end of the range that you have here are your leverage products. And these are for your more active, your more risk-happy investor who is looking to boost returns from what they're doing over a very short period. So if you think that Vodafone is going to go up over the next month, and you want to make as much as you possibly can out of that view, you could buy a covered warrant or a turbo, which may amplify any rise in that in Vodafone by 5 or 10 times. So it gives you the potential to really increase your profit if things go your way, but equally, if things don't go your way, it's going to amplify your losses, because if the FTSE comes down 1%, it's going to come down 5 or 10% depending on the leverage. So what you have there is you have products that are either for long-term diversification, or you have a very specific view in the middle there, or at the top end, you have your day trading products. Very similar to your CFD or spread bet market, but the big difference here is that you can never lose more than you invest. So the worst thing that can happen is that the product expires worthless. So it's quite a nice asymmetric risk profile. Probably a bit of a whirlwind blur in 2 minutes, but come and talk to us at the stand and I'll give you more information about the different styles. The key thing to understand with all of these products is that they're listed on the London Stock Exchange. And as such, they're going to trade in your stockbroker account in the same way as a share. So every product has an EPIC code or an ISIN. And if you go to Barclays or Self-Trade or TD with that code, you can buy and sell units in exactly the same way, which gives you great flexibility. There is a price there on exchange throughout the trading day. So you can buy at one price, you can sell at the other price, and you can do this at any time. Even if it's a 6-year product, if you need your money back over 5 days, there will be a price and you can sell it straight back through your stockbroker. The transparency that comes from being listed on the London Stock Exchange takes away any kind of smoke and mirrors. You don't have to wait for your 6-monthly report from a plan manager. You can go online, you can look at our website, you can look at the London Stock Exchange, or you can go to your broker and you'll be able to see that price. As I say, they're very, very simple. They're designed to trade just like a share. So in a world that you are familiar with and comfortable with, you can trade these very different investment styles. And ultimately, they're liquid, which means that because there's that price that's available the whole time, you can come in or out at any time. There's no restrictions and there's no penalties to selling back. And here's the bits that my compliance officers will want you to know. There are risks, of course, to these investments. The first major one is that most types of exchange-traded products do incur counterparty risk. So if you're buying a Societe Generale product, if Societe Generale was to go bust or default, you would lose some or all of your investment, and it would not be covered by the Financial Services Compensation Scheme. So before buying the product, you have to be comfortable that you think Soc Gen will still be there at the end of the investment term. We've been around for 150 years, so hopefully we will be. Underlying risk. One of the beauties of these products, specifically in the ETF world, is that they provide exposure to emerging markets, to global markets, to fixed income, to specific themes or sectors or very diverse investment markets. But where you get more and more niche and exotic with the markets you're tracking, they are more volatile, so you are more exposed to risk. Currency risk is another one. If you're investing in a market that is like gold that is denominated in USD, you are taking an exchange rate risk between the investment, which is denominated in GBP, and the underlying, which is in USD. And the last one, as I say, liquidity risk. We are bound by the rules of the exchange. We do have to provide prices throughout the trading day. But if If for some reason we are not able to do that, you may not be able to get a price and you may not be able to get out of the product. That's the potential risk. And that's it. That is my whistle-stop tour. But being aware that I've covered such a wide product range and wide topic in such a short period of time, the best thing to do is have a look at our website, which is sglistedproducts.co.uk. There are educational videos, there are guides, there is market news, and there is bags and bags of analysis to help you form your investment view and to help you come to terms with the right style of investment for you that will suit your types of objectives. So I highly recommend coming and visiting us at the stand, and we'll give you a bit more information on what all these products are.